Welcome to Markets Now. I'm Michelle Rook along with John Heinberg with Total Farm Marketing. Well, we ended mostly higher in grains and hogs, lower in feeders, and kind of mixed in the live cattle futures. John, let's talk a little bit about the report. I think, from the soybean perspective, the cut that we saw in Argentinian production was probably a little more than some of us thought USDA would do. They were fairly aggressive, but the privates are much more aggressive than that, right?
Yeah, very much so. We saw the grain exchange in Argentina come down and lower that crop to 34.5 million metric tons. USDA still sitting at 41, so it's got some work to do to kind of tighten that gap up. Maybe they're low shooting it down there in Argentina. We got to come somewhere in the middle. We'll find out. But again, obviously the weather has been very, very severe, and there's been a lot of damage that's been done. And some of the rains they got has almost been too late, obviously, for some of those beans. So that was the big factor. The other side of it too, just seeing the carryout go up a little bit above expectations was a bit of a negative. That crush cut, by 15 million bushels. But again, probably reflective of the weather at the end of the year when transportation and things were just very difficult there at the end of December. So the market got a little bit of a surprise there. Beans hung in there very nicely with those South American numbers, at least in terms of how we closed today. But again, with Brazil coming online, it still just looks like we got a pile of beans coming out of South America down the road. The market's starting to figure it in.
Yeah, do you think we have all the Argentinian crop losses kind of figured into prices, especially for the meal market?
I think at this time frame, obviously with the kind of muted reaction to that cut today, I think the market was already anticipating the number to be below the USDA target, regardless what they put out there today. So yeah, I think right now we got some of that figured in, barring any other major moves by one group or another, or just some type of demand change that we see that can cause that soybean meal market to pop again. This is starting to look like a bit of a tired market here after running to these recent highs and just kind of running out of gas.
Yeah, and you've got to figure the Brazilian crop may be getting bigger too, so.
As long as we continue to see wet weather, as much as that slows down production, it still adds some pounds at the final end, so definitely.
Corn market, the only thing that I saw in the report that seemed to be a bit of a surprise is that we didn't see a decrease in exports. The 25 million bushel pullback or the uptick in ending stocks was a pullback in the ethanol production numbers. Do you think they'll have to adjust exports next month?
I think that'll be the month that they need to make their decision because, our export program is really kicking in right now. So, this is our chance to maybe get some things caught up. Maybe we get some of those surprise sales that we're hoping we can see. Maybe China does step into the market. I think that's really what the market is looking for. A sale to Mexico and Japan doesn't excite anybody because we expect those. And we need to see that Chinese demand come in. If we don't have that, just good step up in the sales and shipment pace going into March, the USDA will likely have to make a move there. And it wouldn't be shocked that we see, that adjustment come adding to that carryout pile.
And we've been hitting our head in that 685 area. I don't know how many times. It's going to be pretty hard to get up to that resistance level and take it out. How many times do you hit your head on that before the market decides to give up here, John?
Very much so. We got a market caught between two different forces right now. If prices rally too much, they get worried about the export side of the equation, which puts a lid on things. And on the bottom side, we got a cash market. We still got feed, shortages in certain areas that are causing the market to be supported. But then henceforth, we go sideways, continue to stay range trade. Anything that we got to watch coming forward. One of the things that always concerns me is that South America bushels find a way into the United States, especially on the East Coast. We've seen that happen before in these types of markets. That could be a negative news event that could cause that market to break through to the bottom side on top of just the news we have in front of us.
Yeah, otherwise we'd need some sort of a safrinha crop problem in Brazil to get the market to move, don't you think?
I would agree. Again, watching the planting pace is going to be very, very key. Obviously, the later they get that crop in, it's going to hit that window when they need to finish out that crop. Will be in that dry season in Brazil. So that could be that factor that comes into play. That'll probably still come down the road a little bit more, maybe after we get things in the ground and have a good look at things. Okay. But for right now, it just feels like this market's got forces pulling both ways, which leads us going sideways.
Kind of a benign report for the wheat market, obviously. And, I guess as we look at the big appreciation in prices today, was that just short covering because the funds are so short, or was that something geopolitical in nature, or what?
The geopolitical side is going to always be on the table. And realistically, I think until we see something cut into the actual export window or the export channels over there, this market kind of will move past it, other than maybe some reaction to headlines. Again, we always got to watch what Russia's going to be doing regarding that in terms of that trade agreement, or that we get those products moving. The other side today, we took out some technical barriers in terms of some moving averages. We saw some pretty good money flow come into that wheat market. I think that was probably the biggest reason for the move higher here. Maybe a little bit of premium coming in case something does escalate there in the Ukraine, with a lot of chatter happening lately.
Yeah. So feeders saw pressure with a little higher corn, but the cattle market, we scored new contract highs yesterday, and then we kind of pulled back. Do you think if we get some better cash trade this week, that that'll be enough to keep that market going?
That's going to be a key in the live cattle market right now. The cattle market looks a little bit tired to me at this time frame. We kind of put some reversals in yesterday. Plus, also, if you go look at the April cattle seasonal window, we kind of peak out around Valentine's Day, and then we have a pretty hard sell-off in terms of the seasonal pattern. Not that I'm negative on the market in general. I think cattle prices have still got a strong uptrend. We're going to go that way, but it wouldn't shock me that maybe we walk back to the bottom of the range here just a little bit, especially if the cash trade doesn't come through. Now, that'll still be the big keys. What does cash do? If it continues to trend higher, this market will stay supported.
And hogs, was that any more than just a short covering bounce here because we're so oversold, or what?
Well, we've seen the cash market starting to wake up a little bit. Retail or direct cash trade was up $3 today at midday, finished today higher yesterday. The lean hog index is starting to climb. It's been moving higher the last couple of weeks. So maybe we found our cash bottom here. I'm trying to be optimistic. And this last little move to the downside probably washed out any weak length. And now we're maybe hopefully building that bottom that we need. But those fundamentals need to hold this market higher for sure.
Okay, let's hope. We've said that before. So John Heinberg joining us with Total Farm Marketing with Markets Now.